Jennifer, I would be curious, in your experience and your colleagues' experience, what type of equity are you looking for when you're investing in companies? And I know it may vary, but.
Well, it is usually convertible debt or equity, so you don't know where you're going to end up. But I would say micro VCs do expect to own, a sizable amount. So maybe I'll give you an example. Let's say maybe there's $2 million that goes in over multiple seed rounds. I mean, it wouldn't be unreasonable for them to end up owning, let's say, 20, 30%. And there's so many factors that go into it, like how capital efficient the company is, how much they're raising over time, how well the company does. But you certainly expect to be rewarded for taking all that risk. I think the other thing that I see is that in order for a venture fund to make the numbers work, they'll often invest a lot more money. They often seem indifferent to whether it's 4 million or 7 million, which is obviously a big difference to me as a micro VC. But they're just that initial decision to invest is such a high bar, and then that amount is somewhat secondary. But
I agree. I mean, I've seen many situations where, the percentage ownership for the investor is far more important than the size of the check they write. So when you do sort of put pressure on the valuation and insist on a higher valuation, which would then result in the investor owning less equity in your company, they will in turn suggest that they write a larger check in order to hit their target, because investors, especially later stage or Series A stage investors, have the internal rate of return models that require that they own a specific percentage of the company, 33% or whatever it might be. And so they're more sensitive to their ownership percentage than the specific valuation that they're agreeing to.